Gold is shooting here to an all-time high. Just traded here, by the way, overnight. I woke up to a wonderful message on my phone that gold had hit $2,264 an ounce. If you guys have been watching regularly, this is something that I've been in on for some time. And this winter just has kept going. It's been really nice. I wish that trading was always this easy. I wish it was always as easy as the chart just went up and to the right. Wouldn't that be wonderful, right? But it doesn't always go up like that. But for now, we're continuing to let a good trade go, and it's looking pretty strong for the time being. That being said, what also do we have on the radar? Well, this week, guys, we have jobs numbers, NFP. This is going to be telling us on Friday what the job market is looking like. Are people out there getting hired, or is there slowdown? Of course, where the jobs market goes, usually the economy will kind of follow. So we'll be looking out for those numbers on Friday. In the meantime, you've got stocks trading just off their all-time highs. They shot up here in the early market session, but have since sort of given back some of those gains. That being said, the stock market's still in a really strong upward trend. And as I mentioned, with all those key economic data points, we'll see if that can continue this week, or if we're going to see some struggle come into this picture. Here's the NASDAQ. This is a lot of tech companies, which is also doing quite well overall, but has since really slowed down. We're not seeing the same rate of change here with the NASDAQ pullbacks followed by strong rips. It seems like those rips have gotten a little bit more shallow. And the reason I point that out is perhaps the Fed cutting rates could be cause actually for concern. Are they going to start cutting rates because the economy is slowing down? That is really the question for financial markets here as we get started in today's live stream. The Dow, also something that I've been looking for a possible pullback play on. I am interested in being long on the Dow, but watching to see if we can get that 50% retracement. So we've had this big move here recently. The Dow is, of course, big companies that we all know and love. We're talking about things like Coca-Cola, McDonald's, Apple, etc. This is a basket of great stocks. That being said, I still would like to be a buyer on a significant pullback. If we get a 50% retracement, wouldn't mind that as a possible buying entry. Let's talk a little bit about some data here as we kick off the week. First of all, top setups here looking great, considering that we are currently, I mentioned this a moment ago, we are long gold. We're also long oil. The DAX is still getting a bullish reading. Euro Kiwi, the dollars are. Here's that Dow, which actually poked back into neutral territory. So going to pause on that, but if we get a pullback and it looks good, I might still be interested on the long side. On the more bearish side of things, let's take a look at what the Edge Finder's got for us. We've got Kiwi Swiss, pound yen, pound dollar, and a theme here has been pound pairs in the bearish camp for the Edge Finder recently.
It's our Edge Finder anniversary sale. If you want 40% off the Edge Finder, the absolute best deal of the year, don't wait and head on over to a1trading.com to chat with one of our representatives live right now. This is the biggest discount of the year, and we have so many new features to share with you, like our Smart Money Indicator that directly compares COT data and retail data against each other, or our brand new data scanners with even more useful information and accurate scoring than ever before. Now is the perfect time to get this powerful trading tool because the 40% discount won't last forever. Celebrate the Edge Finder anniversary by grabbing yourself a copy today on our website, a1trading.com.
So oftentimes what happens is when gold gives you this, big rip to the upside, what you'll see is this interesting formation where, take a look at this. The blue line is net institutional positioning. So big money has actually been accumulating a long position in gold prior to this recent run up. And I've showed this in several of my recent videos, but it's important to note. So we can see that as the price of gold was kind of going sideways, institutional money was actually slowly accumulating it. Then on the huge rip, right? They've been flat, they sold a little during this consolidation, but then they bought back right in and the price of gold continues to go up. So tracking institutional money here actually was a lead indicator to what price ended up doing. Institutional money was buying, right? Retail money actually got short as the market started to rip on gold. Now it's gone back and forth since then, but it's interesting to see this. So institutional money accumulated before the big run up, they're still very long right now. That keeps me bullish on gold in the meantime. So this is called the smart money indicator within the Edgefinder's sentiment tab. You got your COT data, retail positioning, smart money indicator, bank forecasts, all sorts of good stuff. Quick look at the stock market sentiment. What we can see here is this is the AAII investor sentiment. It's mostly for stocks. And what we can see is retail traders. It's retail traders. It's a mix. Generally, this is a good sentiment indicator. 50%, that's a very high read. So 50% of investors are just straight up bullish on the market. 27.6 are neutral, and only 22.4% are actually bearish. So this oftentimes precedes, not always, but usually precedes a bit of a reversal, pullback, whatever you'd like to call it, kind of event. So we'll see how that plays out going into this week. That being said, gold being up while the stock market is kind of flat. We'll see how that plays out. Market is just getting going here in the US, so we'll see how it goes. Let's talk about some other things. The VIX is up here this morning. VIX is up 5% on the day, perhaps suggesting a little bit more volatility is coming into the market here. Look at this, the Dow coming down on the day, but S&P and NASDAQ are green. NASDAQ actually really doing a little bit of a Uno reverse here this morning. In terms of the indices, the only one that I potentially have on my watch list is US 30 or a possible pullback. ETFs don't give you the after hours, which is true. That is true, H-ball out. But the thing is, I'm a swing trader, so I'm most of the time not affected by it, and I don't really care tremendously. But yes, futures may be nice for that, where I can get that round the clock execution stuff. The Russell is slightly down on the day. The dollar index, let's talk a little bit about the dollar. Dollar's coming up here, guys. We are testing structural highs. And also, I should mention that we do we have news today? I think we do. Yeah, yep. We got our first round of data here this week coming in at 10 a.m. Don't let me forget it. At 10 a.m., we've got manufacturing PMIs. Give us some insight as to what, manufacturing basically is looking like in the eyes of purchasing managers. So that will be potentially impactful here this morning. It will be really impactful to the dollar itself, right? Is the dollar going to continue to drive through this level of resistance, or is it going to roll over here? I think you might get your early signal on that on potentially manufacturing PMIs as well as services. Of course, the big one here this week is going to be NFP on Friday, but I would say watch the price action here as we close in on this level, because previously this was a huge sell-off zone for the dollar. So we're stuck in this range, but if you get some surprise data here this week, let's just say the US data is strong, we very well could actually see the dollar push higher. And you might be saying, well, is that going to, greatly change when rate cuts do actually happen? And the answer is yes. The answer is yes, that if you get really strong US economic data, we might just see 2 rate cuts this year, despite what the Fed said, right? But if you get cooling economic data, and this is why this week is so pivotal, if you get cooling economic data, it's perhaps more evidence that the Fed is actually serious and we may see 3 rate cuts this year. That's where this data was so impactful this week. That being said, the dollar is priced against its peers. We talked a lot about this last week. And right now it's doing a lot better than the European counterparts, right? Which of course, when you're talking about how the US dollar is the US dollar strong or weak, the only way to really tell that is how does it compare to its competitors, the euro, the pound, etc. If you're watching the pound, the Edgefinder has been really bearish on the pound pairs. And if you've been watching like pound USD, it's been bearish on this for like a week or so now. Pound USD, pound yen. What I'd be interested, I don't have any trades on pound dollar, but what I'd be interested in would be, hey, can we get a break of this low, right? This has been a really choppy consolidation zone for the daily chart, right? So this is a couple months back of price. We've really struggled to break through these lows. Buyers have been pretty resilient here. But if you see a change of nature in that, right? Like if you see like, oh, dollar bulls are just really strong and they can drive the pound lower, especially with what we have on the docket this week in terms of economic data. If you get some strong economic data, bulls might be able to push the dollar up, and that strength in the dollar could drive the pound lower. So this might be a trade to watch out for. It's one that I kind of like. I mentioned also that a pullback prior to this could also be interesting for sells on the pound dollar, but the trade didn't set up. So my next scenario would be, like I said, a failure at this level from the bulls actually could be a nice continuation setup. And about 10 minutes out, we'll see PMI numbers for manufacturing come out of the US. We'll see how that impacts. Those yields coming up, by the way, are helping out the dollar. Seems like that is the driver here for the dollar index. Some correlation coming in between the 2-year yield and the dollar index here this morning. Oil's back to flat on the day. Platinum down on the day, 1%. Here's silver. Where did my WeBull get logged out? What the heck? Anyways, silver's up 0.3. Gold is super volatile here this morning, guys. Look at this. Look at this 1-hour chart. Drove higher, now pulling back. Is there a pullback here on the 1-hour chart? Could be interesting. Maybe keep an eye, guys, on this level, but this is a bit of a ways away. Yeah, that's a ways away at this point. But if you take a look at the 4-hour chart, let's do a quick 4-hour update on gold. We've definitely got to adjust a little bit here for this recent topping area. Okay, so there might be something here. The edge finder does not currently have a bullish signal on gold, so I probably won't add any more trades to my gold position. Where's my stop loss on gold? Let me check this. So I am probably staying. Oh, I am going to stay in gold unless we break through all these levels, right? If we break through the 61.8% and this support level, that's going to be enough evidence for me to go ahead and get out of the trade. But for now, this is a big wick on the top, but we'll see how this day closes, right? The gold market is very volatile right now. We could drive right back up by the end of the day. Is this driving stocks back down? Kind of. Look at this. Interesting that you're getting a big wick on the top for NASDAQ. Well, not NASDAQ, S&P. Look at the divergences here, guys. Very interesting. I bet you that's the semiconductors. Let's see if that's the semiconductors. It is the semiconductors indeed, guys. Semis up 2.58%. That's going to be your companies like NVIDIA. Is NVIDIA just doing NVIDIA things this morning? It is. What about Taiwan Semiconductors? There's the culprit, up nearly 5%. And I think, guys, we've got China on the move too. You guys know I am long FXI. In fact, I got to check my covered call position, guys. FXI. Let's look. So I have a covered call at $25 a share. So I might need to, or I might be, let's see how this is going. All right, so FXI. So I'm long the Chinese stock market, which is a bit of it's a small position on my account. So let me preface that it is not a ginormous position on the account, but FXI, I have 2,000 shares at $22.90 a piece. I've sold calls at $25 against my position. Why would I do that? Well, because basically I am setting essentially, this is a different strategy than my momentum strategy, but I've sold calls at $25 a share. So if the stock market in China continues to drive higher, I will max out my gains, take the premium and my profits on my shares at $25. I calculated it out. I think it's about $7,000 that I will basically make if price is above 25 by expiration. Expiration is the 12th of April. Today is the 1st of April. So if we have 11 days to go and price continues to drive, then again, my max profit is about 7,000 on this position. If we were to stay above that price on expiration date. We'll see, but yes, it is the semis here this morning that are leading. And again, the Chinese stock market up 2%. FXI, that's not a bad move at all. TLT position, however, not going so well. Check this out. Let's get that. Let me show you a not great trade for me right now. TLT sold puts, looking more likely today that I could actually get assigned the shares. Which let's take a look at this. So I sold. Let me log back in. FXI, oh, not FXI, TLT. TLT, look at that, wiped away all of the profit premium that I had in unrealized gains. But let's look at this. So TLT, here's my position for those of you guys who like the options side of things really quick, I'm just going over this. I sold puts on TLT. Essentially, I'm bullish on TLT. I wouldn't mind owning some shares. TLT, I sold $93 strike price. We are trading currently at 92.99. So how am I up in all on this position? Well, it's because TLT, no, I'm not. I'm about flat. I sold puts, so I collect premium for selling those puts, and my expiration date is way out here. So look at that. I've given away all of that premium since last week. Hindsight is 2020. I should have closed out when it was up here, but that doesn't do you any good because trading is a lot easier on the left-hand side of the screen than on the right-hand side. Once you know what's happening, it's easier to say what you should have, could have, would have done. But there's TLT selling off here this morning. That is in direct inverse correlation, of course, to the 20-year yield, which is spiking here this morning. Guys, we're about 6 minutes out to our first data point. And it's interesting to me, the market is not totally creeped out by this. Jumping in yields, we see the 10-year yield up 1.87%. That is not a light move. That is an aggressive move, and we can see that happening right in front of us. So yeah. What made you bullish in the Chinese stock market? I'll keep it really simple here for you, not to go into immense depth. The Chinese economy has been so beaten down. It was a contrarian play. When I sold puts initially, I got filled. I'm now in the position. I'm selling covered calls. I don't think the Chinese economy is totally going away forever, but the Chinese government has also in recent times stepped in more aggressively with stimulus programs to try and revitalize their stock market. They are sick of their stock market being down while the rest of Asia is doing quite well. The Indian stock market doing incredible. The Japanese stock market doing incredible. They don't like being the Debbie Downer when everyone around them is doing quite well, right? So they've recently instated many ways to help their own companies. They've lifted the margin requirements, essentially liquidity requirements for their banks. They're doing a lot of stuff to help out their companies. Will that materialize? It's yet to be seen. I took it as a trade, and FXI is doing okay overall. So I've got one current position that has now gone negative for me, TLT, and I've got 3 positions that are doing okay for me between US oil, gold, etc. And again, we'll continue to monitor those plays there as well. The dollar index is up today, again, likely off of yields. And in just about 4 minutes, like I mentioned, we will be getting some data on the PMIs. And what I want to mention, this is why I'm so interested in this PMI data here this morning, it will directly impact this column. So for those of you who are EdgeFinder users, keep an eye on this day, because again, with this PMI data coming out, your EdgeFinder within the next 20 minutes or so will update based on that data. And the reason I mention that is you might see some new setups here on the EdgeFinder within the next hour. So PMI data will come out. The way I'll explain this really quick is we go to our data scanners. Let's say that you are, oh, by the way, we finished gold. That's kind of a fun update. We finished the data scanner for metals. Right now in the EdgeFinder, gold is the only metal, but we have plans to add copper, silver, platinum. I'm so excited for it. But those things are coming to the EdgeFinder, so stick around. But again, what we've got here is currently a neutral reading for gold. But if PMIs, right, manufacturing PMIs, we can zone in on this really quick. If PMI numbers come out weak today, right, weaker than the previous, for example, this number could change, and so could this. If manufacturing PMI come out weak today, that's going to be probably good for gold, right? Because a weakening economy is usually good for gold. It creates demand because people get a little bit unsure and they start going into precious metals. So we're watching for that number. Right now, you can see manufacturing PMI is actually working against gold. It's giving it a -1 score. If we see weakening economic data today relative to the previous, it could actually give us a more bullish reading on gold, and we'll watch for that. That flip would result in a 2 additions, right? Because that wouldn't be -1, it would be +1, which is a shift of 2 points on the EdgeFinder scoring algorithm. PMI numbers come out again, 1 minute, 40 seconds. We'll see if this does impact things. Let me go ahead and set up my screen here. I haven't done this on the new PC yet, but I'm gonna try and do our full screen. Let's see where we're at. Okay, so we got full screen here, guys. As we get closer into the PMI data, I just want to walk you through what you're looking at. You've got the Dow over here. You've got the S&P over here. The NASDAQ just fighting gravity right now. The dollar index, the pound dollar, the euro dollar. You got gold up overall, but challenged here this morning. We'll see how PMIs hit that one. And then oil also trending up. We'll see if that can continue. I am full transparency. I'm long both of these things. And I'm also with my TLT position. It swung all the way back against me here today. So I am flat on that position as of last checking. We've got just about 40 seconds here before the news. PMI data, again, coming in hot. We'll see how that impacts all of these charts. But again, I just wanted to tell you guys where you're at. You got your indices over here. So if you're an index trader over here, dollar index, if you're a currency trader here, and if you're a commodities guy or girl, there's your gold and oil. So check that out. Keep your eyes where you want. And again, coming in about 20 seconds to go now, we'll get manufacturing PMIs, see if it does anything to our charts. We'll go ahead and run our breaking news coming in right after this. All right, let's see what we get in terms of numbers. All right, numbers should be dropping. Dollar index initially making a push higher here. Gold coming down initially, US oil. What that would suggest, at least off of first reaction here, would be that the PMI number was strong. Let's see if that's right. Yes, it was. Okay, wow. Wow, really strong. Okay, so we were expecting 48.5 here, guys. We got 50.3, actually seeing expansion in the manufacturing PMIs. I'm pretty sure this is the first expansion in a while, unless I'm wrong. Yeah, that's the first expansion in manufacturing PMIs since 2022, October. Very interesting. ISM manufacturing PMI, again, first positive number here, growth. That's going to be a bit of a market shifter, I imagine. And stock market, a little bit of mixed reaction, but look at that, the euro and the pound hating it, right? And probably terrible for my TLT position, guys. This is probably actually not great, right? Because again, great for oil, by the way, should be good for oil because again, stronger PMI show stronger economy, more demand side for oil could be good. Gold, not great, right? Dollar, great. In terms of TLT, there we go. Look at that.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.